Welcome everyone to this new video for all those interested in this upcoming major exchange, backpack exchange, which is also a backpack, which is also a wallet, backpack wallet. Welcome everyone. Thank you for the enthusiasm on the previous videos. We will see several things together today. We will talk a bit about the result of points from last week. The video is a bit late compared to what I would have liked to do, but question of timing. We'll see that together. What did the delta neutral yield? So trying to farm, generate volume while minimizing losses, using delta neutral to neutralize positions. And counterbalance gains or losses while making volume. How many points were earned with just one single order, one single position per day. We will try to optimize that together and support the different strategies. We will talk about the small updates to backpack, the recent small updates. We'll go back over the fees, new feature of backpack, a funding tracker to compare across different exchanges. It can allow you to do arbitrage between the different wallets. And at the very end of the video, we'll do a little market analysis of BTC and ETH, I think. Although there are more things to say about BTC than TH. With a trading system that I find simply brilliant, it's what allows trend following, which I got exactly from Pierre Crypto on French crypto Twitter, whom you might know. A great trend trading system that gives us good trend indications, gaps to fill in case of trend recovery, etc. We'll see that together at the end of the video. I think this little market analysis might interest you. First of all, the small backpack updates we have improvements and more availability for the display of trigger price. So the prices at which we are triggered. So it's really for detail. Some people are interested in that. Personally, I'm not particularly interested. But if I understand correctly, it's to give us the choice if we want to be triggered at the mark price, index price, or last price. It's different ways of displaying and understanding the price. So we have the alerts. Yeah, it's a gadget, but why not? It's super cool. We have the sound for the alerts. For the alerts our orders that were filled, we have the alerts. We have a bit more detail on the charts with the take profit and stop loss prices. So why not? Why not? These are little additional features. Backpack aims to improve its exchange day by day. So these are little gadgets that we take and that will improve the user experience, I think, over time. When we set stop losses and take profits, we now have the raw version of how much we can lose or how much we can gain on a trade. So it's cool. It gives greater clarity on understanding our trades and our stop loss take profit. So it's cool. We have this famous funding rate page to track and compare the funding rates with other exchanges. And for those who want to delve into it, some arbitrage and overall improvement of the application, whether Android or iOS. Improvement of the application, an application that I have used a lot until now. And it's a real joy. It works super well and it's great, honestly. The app is super. Maybe one day we'll try to make a video specifically about the app. That could be nice. Let's see. Moving on to the exchange. As a reminder, I can also include in the description a reminder of the fees. This can help, how much you will pay in fees for example, 1 million in volume, whether it's in taker fees or maker fees. So, as a reminder, taker fee is when you are going to execute your orders as market orders. So with orders, you will take liquidity from the book. In the order book, you are going to take liquidity to execute an order immediately, which will cost more in fees than limit orders in maker fee, where you place orders, you bring liquidity, you bring information, liquidity to the orders, to the order books. I try to really simplify as much as possible because I think it's not, I might be wrong, but I think it's not information that interests you. At 300%, but the most important thing for me is to convey to you the knowledge that maker fee will be your limit orders and taker fee the orders you will place as market orders. What is more expensive? And we are going to, I'm telling you about this now because it's to make a connection with the cost of this week of farming. This week of farming where we recovered 366 points. It's not too bad, but we can do better by placing one order per day. So as a reminder, what was I doing? What had I proposed to do? Open a position. The size is up to you. The main thing is that you can counterbalance it on the other side. So I do it on Hyperliquid to neutralize a position of the same size. To neutralize, it's never 100% neutralization because there are always spread discrepancies. You always have slightly different prices depending on the exchanges. You have the funding rate, which is cancelled out because there's a position on which you have gained funding, and the other inevitably loses because these are two positions of a different direction. So inevitably, you will gain in one place from the funding and lose on the other. The fees are the biggest cost at the end of this strategy. My mistake, I calculated. You can pull out your entire order history for all your order history with the fees, prices, etc. in Excel. That can help you have a better understanding of the fees. That's what I did for Hyperliquid and Backpack. So this week, when I got back 300, almost 400 points, it was based on, I would open an order. I would open in the opposite direction on Hyperliquid, which I kept all day. Next day, I would close that order and reopen in the opposite direction, which I would always neutralize on the other exchange. So at the rate of one order per day, I was generally in positions. Each time I launched my orders, I was generally around $4,000 to $5,000 in order value in position. What made me do it roughly? I think I started last Saturday until Friday. Yes, my interpretation was wrong because points are distributed on Friday, but the snapshot considering the activity is taken on Thursday at French time, Thursday at 2 in the morning. So that makes me roughly at this rate $55,000 of volume. It obviously depends on the BTC price because I was always opening the same quantity of BTC, which was 0.05 if I remember correctly. There you go. So the big problem with this technique and the way I did it was by only executing market orders. I have no regrets because I wanted to test it no matter what. It allowed me to still backtest well. I only used market orders, but as a reminder, it's cool. It executes instantly, but the problem is that it's a bit expensive. By only using limit orders, you more than have these fees. So it's huge. That's what I'm trying to set up for this new week. Because with what I told you, with my position sizes, and with the volume that I did overall on the two exchanges, so Backpack and Hyperliquid, it roughly cost me, I will even exaggerate a little, I think between $60 and $70 in fees, which is huge for ultimately 366 points. We said 366 points. I'm trying a new approach. I don't always have the patience to execute with market orders, but I'm forcing myself with limit orders as far as I'm concerned. But the goal will be to backtest. We'll have a more detailed discussion in the future. But to make as many limit orders as possible. The problem with limit orders, well, is that you set a price and you have to remain patient to be lined up. Generally, right now, the market is so volatile that you get lined up, your orders get filled quite quickly, and it costs much less. Except that, in addition, what I'm going to change for this new week and the weeks to come, which we will review much later, it's about handling my delta neutral twice a day and not once a day. Hoping that it won't be considered by Backpack as wash trading and that it won't prevent me from earning the points I need. So, concretely, on day one, I open a position. I open in the other direction on Hyperliquid. The next morning, for example, I'll give you a typical week. as it may help you. I will simply close the positions, open in the opposite direction on the two exchanges, and always in different directions because the goal is to neutralize. I let it run. In the afternoon, I do the same. I close and reopen. And we find ourselves the next day where I do the same operation. The goal is to, so to speak, double the activity and see how much it can bring compared to the previous week. So it's a bit biased, but I try my best. But it's a bit biased because inevitably, as the weeks go by, the share of the pie decreases because more people farm. In principle, the distribution of points remains the same. I hope I'm not saying anything wrong, but I believe we're indeed at 10 million points each week. But inevitably, there are more and more people farming, so the slice of the pie shrinks. We try to adapt. The goal is always to accumulate as many points as possible. We try to do it together, and in the end, enjoy a nice airdrop thanks to these points. So, here is the new manipulation. We'll make a point much more spread out. Just to make, there you go, you now know what I do, what I'm trying on my side. And we will see how it affects the points, etc. I have talked mostly about the most important things. So, as a reminder. So, as a reminder, the people who want the KYC, but for whom the KYC is not available once you get to the page, registration is because in some countries we have a backpack exchange that is completely open. And for other countries, especially certain countries in the European Union or others, the site is, on paper, still in beta. It is possible, as proof, I am doing it as a French person. It is possible if you want to trade, to handle volume, to do the internal kawashi, it will be, you need to send us an email and we will direct you to someone at Backpack to validate the internal kawashi. It's totally possible. I have seen a few French influencers. I have one in mind who did it on their Twitter. It's 0x and Gray, maybe you know them, who tweeted about it and explained the same thing as me. We certainly have the same contact as French for Backpack. There you go. So don't get any ideas. If you just want to use Kawaii for Kawaii's sake, it's pointless. Your account will be deleted. They make the effort to validate Kawaii internally themselves for the French and others. For people who want to trade to make volume because it allows them to gain a maximum of activity and to make the exchange evolve, quite simply. I also wanted to tell you, for everyone who registers through the affiliate link, we return $30 per $1 million of traded volume. So it can be useful to some. That's all. It's a small portion, but it can always, which can always make a difference. It's always something gained. It covers some costs. There you go. $30 per $1 million of traded volume. Once you're registered, KYC validated, you come back to us by email in the description and we set that up so we have your alias in the affiliates list and we can distribute that smoothly. I think I've said the main points that came to mind. Let's go straight to the analysis. So we now meet for a little market update. I will try to keep it quite simple, but while explaining what this trading model consists of, this type of trading, TISH, which are based on horizontal levels that we don't really know much about these days with a very volatile market, and notably moving averages. What are moving averages? Nothing magical. Keep in mind that there is nothing magical in indicators in general, and even less in this one. It involves a lot of understanding, a lot of work, and moving averages are mathematics. It's simply the representation. For example, here we are in daily. In red, we have a 300 MA, so a moving average 300. So a moving average, more precisely, a simple moving average, but that's a detail. Doesn't matter. A moving average 300, which corresponds to an average of 300 daily candles, plotting an average of the last 300 daily candles. So nothing magical. It's simply based on mathematics, and that's true for everything. We have a 200 EMA, so a 200 exponential moving average, that N, which adapts to the time unit. We are on daily, so it is the average of the last 200 candles, of the last 200 daily candles, which then gives us price averages, which draw a line, a line or other things depending on what you have chosen on some important zones. So in the end, everything is based on mathematics, and with that we derive horizontal levels. So nothing magical. That's what you need to keep in mind. The purpose of these systems is so you see, we have a few examples, we have a few concrete examples of trend rejections. It is very, very interesting. We see that it comes close to touching or just about touches. What is interesting is to be patient with these tools, to be patient and make decisions. The goal, I think, in any case for me, how I will present it to you, is to anticipate as little as possible. We know that in trading, we can anticipate trades, we can anticipate taking positions. Anticipation can lead to big rewards, but the problem is we can be faced with a relatively low success rate because we anticipate. The goal with this kind of strategy, this trend following method, is to look for gaps to fill, trends to follow, to be patient, wait for closings, some confirmations, and take position. So when I talk about filling a gap, we had a great example over 3 days. So these are large time frames. I don't make a lot of active trading decisions over 3 days because it's soon too big. After that, the way I'm going to express myself, I'm really speaking for myself. And if it can give you ideas, so much the better. But it gives 3 days really allows for a good perspective on the short-term market. But my decision making occurs mostly in 4-hour and daily time frames. When I talk about a gap to fill, it's simply the goal is to target the biggest gaps to fill. Here we have a kind of super important gap. We have very interesting zones of confluence because we have a lot of averages. We rub against a lot of averages, so to speak. So it's a big challenge for the price. In selling legs, it was not very convincing. It's not very convincing at the closing of the beds. So what we can hope for is good timing for me. The kind of strategy we can adapt in these situations is to say, okay, I short until we have recovered the daily trend, and I try to cover this entire gap. And we can see that. So it's this kind of success that we're looking for. We can even partially cut the positions. Honestly, when we fill the gap, we don't have to cut all positions. You might say, I'm waiting. As long as we haven't recovered that trend, I hold. It might allow going a bit deeper. There. The goal is to trade in a fairly broad manner. When I say broad, it means not trading with 100 times leverage and having your liquidation price 1% below or above you. Because it unfortunately doesn't match this type of strategy at all. The goal is clearly to be patient, to wait for closures, and to allow positions to run. At least my approach is to let positions run without a stop loss, for example. Because I am so broad in taking positions with a liquidation price sufficiently distant, which allows me to wait, to fill gaps, to wait for closures like this. But at both for cutting losses and taking gains, let's be clear. So there you have it. We're going to try to form this habit of doing little market reviews. I'm going to try to explain this trading system more and more. I hope we'll have concrete cases to demonstrate with gaps to fill, etc. Concretely, what interests me is that we will talk in large time units. I am not here to do scalping with you. We're in relatively important zones. We can see here that it was quite decisive. A small zone where the price struggled to reach new highs. So these are, for example, areas that I can use to draw major supports. And what I like, moreover, we returned twice to this major support, which in addition corresponded to an M300, so a huge time average, and moreover, we are on daily. So these are prices I keep in mind. We came well, you see. And anyone who tried to long this 300 moving average had, why not as a first target, to recover the 200 moving average. And it was, in hindsight, it's easy to say, but it was a trade one could say, okay, it was an easy trade. We went to fill all that. We went to battle. You see, with all this confluence, it was tough. This kind of strategy makes us face fake outs, unfortunately. Two false acceptances of trends. I'm trying to find good vocabulary and be quite simple to please everyone. Unfortunately, 100% doesn't necessarily exist. There's nothing magical, as I said. So you will face false trend recaptures, false trend rejections. These traps, that's the aim. And that's why we strive to be as patient as possible. What I could have talked about earlier is that we have, I can call it the small trend. We have the small trend which is composed. So this pink line, do not take it into account. This pink line, it just conveys to us where the M1 200 4 hours is. You see, if I switch to 4 hours, it is on the other line, which actually corresponds to the M1 200. So it's my black line from memory. There you go, that's the one. The minor trend, so the dark blue, turquoise blue, and red, which is composed, if I remember correctly, of the EMA 13, 25, 32. And we have the major trends, so the gaps we are going to find that we will try to fill. The moving average 100 in green, the exponential moving average 200, and our moving average 300. It's more than enough, it's already very good. It's already very, very good. I will try to detail further as the videos go on, if you're interested. So we are in price zones that we can, I think, call interesting depending on who wants, of course. Price zone in which the price previously struggled to reach huge highs. We've been there twice. We had a nice liquidity hunt in the end. You see these large wicks that left a lot of liquidity behind have been hunted. Also, the last one, where we might have believed in a final bottom, we came back to recovery these last 2 days. Plus, we have a daily close that is remarkably salvaged here. But the problem we face with this kind of situation is the momentum. Today itself, we are facing a big rejection, on which I give myself some leeway. I am personally long on this area. I am even long around 79,000 if I'm not mistaken. And what interests me is that in 3 days, while keeping this zone where there was a fierce price battle, we saved the 3-day closing once. So the 3-day is still a relatively important time frame. We are for now still above this very interesting support zone. We fought beautifully with the moving average 100. What interests me with these so-called beautiful battles, I call them beautiful battles because the underlying trend remains doubtful. But what interests me here is the fact and why I stay long here, specifically the invalidation of my long position that started around 79,000. My invalidation, therefore, as usual, as I said earlier, the goal is to treat very broadly, very deeply, very, very deep, to avoid having to worry about the liquidation price, to trade in small size, to accept losses until riding a big trend. So there it is, my invalidation here. Now that we have acted well, in this area, my invalidation and the loss of this whole support zone, which would confirm for me, if it happens even before the 3-day close, maybe considering filling that entire gap. I'm speaking about it cautiously. I'm not necessarily a fan of talking about this right away in the first market analysis, etc. Because, as I said, I don't make decisions in 3 days. The 3 days allow me to gain an understanding of the market, but not to make decisions. The daily is much less intimidating. Only the 3 days. Because concretely, when we look at the daily like that, what I understand is, and okay, a 300 MA, I'll let you look. I let you see to what extent in the end actually. What is good with this trading system is that we can look at a lot of history. We can see that the 300 MA is relatively important. Honestly, even in the most complicated market moments. Now, we are in August 2023. I let you look at the importance of a 300 MA. When it is below, at least, and not when it is above in a massive bear market. That's what you need to keep in mind. That's why even having closed below potentially this evening and having a 3-day like this, it's something I want long with a clear invalidation. The invalidation is not losing, not the loss of this 300 MA, because I struggle even with drawing supports and resistances with simple lines. That's why I prefer boxes, because boxes allow much more margin and freedom at the cost of expressing oneself. That's why it's good to trade in small sizes, trade deep, and to accept this kind of loss. Because in that case, this whole box is kept. A closure above the MA300 happens again. We have enough to go surfing. And especially we can say that we'll have the 3 days. We've done beautifully. There you go. I also invite you to look historically overall at the importance of an M at 100 over 3 days. It's still relatively interesting. This is the first analysis we are doing together. I'm trying not to confuse you too much, not to say too many things. There you go. Overall here I am in a long position, betting on the market to rise. And we will see together in future analyses. We will revisit this long what it has resulted in. But there you go. If you have any questions, I remain available in the comments. Do not hesitate with this trend trading system that I find simply so extremely interesting. I haven't talked about the 4-hour. We're not going to talk about ETH because, as I mentioned, it's impressive. It has destroyed many more structures than BTC. The situation with ETH is very delicate. Maybe we will talk about it soon. I'm not going to talk about the 4-hour either because, well, as you can see, it is below all the trends. It was everything was rejected in the end. Everything was rejected. We had a great point to short yesterday. My bad. What am I saying? Yesterday, last week, we had a great short point in 4 hours on a 300 MA, on the bearish retest of a 300 MA. But anyway, we're not going to focus on the 4 hours now. We're concentrating on the daily and the 3 days. I think it's an excellent thing. There you go. If you have any questions, don't hesitate. We'll continue to talk about trend trading together. We'll see together if it works and if we can get results from it together. But concretely, there you go. To give a little summary. So I'm long personally since roughly this kind of price. We have an invalidation. I don't have a stop loss. I don't want to be fixed. I allow myself the appreciation at my own risk, awaiting the closures. It can be risky, but I allow myself the closures. In case of success, we will have a 200 EMA as the first target, and then many different objectives on the rise to pursue. I hope you found this interesting. As a reminder, if you want to do KYC and you can't at your registration, you contact us. We validate the KYC internally with Koenig & Bellbach. For affiliates, those who sign up with the affiliate link in the description, we offer $30 per million, and this is expected to increase. We offer $30 per $1 million of trading volume. It can escalate very quickly with leverage. But be careful. The goal is not to break your teeth. The goal is to score as many points as possible with delta neutral. And there you go. Good luck to everyone. Happy farming, happy trading, and see you in the next video.